Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job is not just to entertain you, but to educate, to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. After 20 years of Mad Money, tonight let me lay out my 2026 game plan for you. I want you to manage as much of your own money as possible. As I laid out in How to Make Money in Any Market, my new book about how the market really works, along with an index fund. I want you to own individual stocks, not trade them. Own them and let the power of compounding do its work. Most important, I want you to stick with those great stocks because that's where most people go wrong. They get shaken out of their long-term winners. Buy, sell, stop it. So on a day when the Dow jumped 595 points, S&P gained 0.64%, and the Nasdaq climbed 0.69%, I need you to understand what makes my approach different from the conventional wisdom. It's all rooted in the sales and trading I did for 20 years before Mad Money started. I want to show you the fallacy of trading and the greatness of owning, and today's a terrific day to do so. First of all, we know the story of the day, right? President Trump's overthrow of the ruler of Venezuela, President Nicolas Maduro. There's a lot that can be done and said about the Dunroad Doctrine and what it means for American foreign policy. But as investors, come on, we want to try to make money off it. That's why you come to the show. That's what I deliver. The thing is, even though this is a big story, it might not be a big long-term business story. And we're looking for big long-term gains, not that short-term profits that just comes from scalping. Sure, it's exciting to play what I call the parlor game of guessing what will go up, what will move on a given day. You have Chevron with its Venezuelan interest. It's held for ages. Now, it might get more than the 100,000 barrels per day that it currently pumps from the once great Venezuelan reserves. Country only pumps about 900,000 barrels a day, and most of it goes to China. Maybe that contract can be broken. Venezuela owes so much to China, as much as $50 billion. And who knows if Maduro's replacement will honor those debts. The U.S. refiners, especially Valero, may be a big beneficiary of that oil because they still have refineries that can handle what's known as heavy crude. That's what Venezuela produces. Valero, Phillips 66, and Marathon Petroleum could be big winners in the U.S., but only if they can divert that oil to the Gulf. Who knows? Venezuela's oil infrastructure is a mess, though. They've been starved for ages ever since George W. Bush tried and failed to oust Maduro's predecessor 23 years ago. Everything's going to have to be rebuilt. Maybe Halliburton, KBR, Schlumberger, now SLB, all got major contracts in Iraq for a similar situation. Maybe it could happen in Venezuela. They could be considered potential winners here, too. Now, that's the speculation. Here's the issue. All these stocks I just mentioned zoomed from the get-go. You had to pay top dollar to get into this game today. I think the moves were well thought out in terms of the players. The stocks were right, but they were not well thought out in terms of profits. In that case, the stocks were wrong. Why? Because they opened too high, all of them. Now we have a set of overinflated stocks, and you got to expect losses for those who came in at the high, because the time frame here for all these stories to play out is years, not days. I am betting that in a few days or even soon as tomorrow, there will be no one to sell these stocks to at a profit if you bought them when they opened or throughout the day. Now, we know because we've been through this before. When George W. Bush invaded Iraq, there was a lot of talk about taking the production of 2 million barrels per day to as much as 12 million barrels per day one day. But you know, it took 9 years to get Iraq's production just to double to 4 million? And it hasn't gotten much beyond that. Oh, but honestly, the Iraq situation might be easier than what we're looking at in Venezuela. Yeah, it's that bad there. Consider the process. Venezuela nationalized most of their oil production years ago. You'd have to privatize it again, which would prove very difficult. Then there's no money up front for any of these projects. And most important, oil's been going down in price. So there could be very big losses for all concerned, except the refiners and Chevron. Then again, if Chevron were to double production, you know what? It would still be just a drop in the bucket for that oil giant. Now, I don't know how the refiners are going to get that crude that is meant for China to pay its bills and the debt that Venezuela owes China. And you know what? I don't think any of the traders have thought this through. So then how do we profit from the turmoil in Venezuela? Candidly, I don't think there's very little to be there's very little to be gained. And the buyers have already gained it. I have no desire to rain on anyone's trading gains, but that's all it is. The people who did well were the ones who already own these stocks coming into this morning's session. You were too late from the get-go if you came in today. Sad fact, but true. And look, I think this kind of trading is really ill-advised. Long-term, I believe it's going to give you suboptimal returns. It's very rare these days that everything is unexploited at the opening. You were simply too late as the trade was over by the opening bell. What should we be talking about instead of Venezuela? I like to talk about things that can make you money. How about something that did next to nothing at the opening, allowing you to get in the low? How about the bank stocks? Coming this year, I tried to determine what stocks are still cheap so you'd have something to fall back on if these stocks were to go down. I looked at the charitable trust names, such as, and I also looked at JP Morgan and Citigroup. And based on their valuations, these stocks are still outrageously cheap versus the rest of the market. If they go down, you know what you can do? You can buy more of them. Take Goldman Sachs. I've been shouting from the rooftops that this will be the year of mergers and acquisitions, not to mention gigantic equity offerings. Goldman stock opened almost unchanged. It sells at just 17 times earnings, less than the average S&P 500 stock, even though it's much better than they are, and it's a huge player in M&A and issuance, IPOs. That's worth buying. The stock ended up rallying nearly 4% after it caught fire. You could have made all that today, and I think it's still got lots more room to run. Not a trade. Or how about Citi, which was up huge the last year, but still only sells for 12 times this year's earnings estimates. I think Citi will exceed those estimates, continuing its resurrection from the dead. The stock opened just a little bit higher, so if you bought it here, you would have had a decent shot at making money, as Citi finished up almost 4% as well. But again, that's chump change. It's the big move, the multiple-year move that I want you to get. Let's consider Capital One, which recently acquired Discover to become a very heavy hitter in the credit card space. I think this bank, which trades at just 12 times earnings, is the cheapest of all. It's terrific if you think there'll be rate cuts this year. Something is pretty much assured given the candidates that President Trump is looking to replace Jay Powell, right? Capital One will be using this Discover network that it bought last year to extend it, reach, and is buying back a ton of stock itself. It's not too late to buy the stock, which the charitable trust owes a lot of. What else could you look at on daily today? I like to watch the declines to find good entry points. I want to see what's on sale. Take all these drug stocks. Oh, boy, were they on sale today. The fastest grower, the best opportunity here would not be Eli Lilly, which has moved a great deal, and I still like, but Johnson & Johnson. It's spinning off its orthopedic business, Deploy Synthesis, something that will immediately raise its price-to-earnings multiple because that business is much slower growth than the core pharma franchise. Same thing happened when J&J spun off Kenvue, its over-the-counter drug business. Great move to raise the valuation. At one point, this stock was down more than $5 today. I think it's a terrific entry point, even down 3. Notice what I keep coming back to, the price-to-earnings multiple. Because of the interest, the PE multiple section of how to make money in any market generated in 2026, in 2025. In 2026, I have to teach more about this magic elixir. The PE is where the gains are. Bottom line, if you can get the stock of a terrific company at a discount, not a premium, as so many were willing to do it, the Venezuelan incursion that I'm telling you I think will be ill-advised, then you're investing well instead of trading badly. And history shows us that that's how big money is made. Not theoretical, not endless trading, but actual investing. And that is what 2026 will be all about. George in Texas. George.
Hey, Jim. Thank you. Longtime listener. I'm just calling about ServiceNow. A recent stock split. Do you like it at these levels?
Well, the problem is that it is a software company, and the software companies are being eaten by the hardware, some would say. It still has a high price earnings multiple. I was surprised the stock gave up so many points on Friday. I thought it would bounce back today, and it really didn't. I think that at 42 times earnings, that's a PE multiple, it's still a little too high for me. It is one of the better companies in an industry that is being well, it's having a tough time with AI, even though it is an AI leader itself. Odd, huh? Robert in New York. Robert.
Jim, how you doing tonight?
Hey, Robert, how you been? What's going on? Happy New Year.
Jim, Happy New Year to you and your family, your wonderful family. And I just want to say I was just sitting in a restaurant, and everybody's like, where are you going? We're ready to eat. I said, I got to call Cramer because I can't make a move without this guy because he's the one who makes everybody money.
Don't let the food get cold. Maybe he has a salad.
No, listen, your book, everybody should get that book because I've learned so much from you, buddy.
Robert, okay? Be the man. Thank you.
Thank you, Jimbo. All right, Jim, this next company is starting to break out. It's up almost 20% in the last month. Their proprietary credit models, adaptive checkout, and merchant tools have fueled it a 30% year-over-year increase in active merchants and strong consumer growth. Now, here's the key to this company. They have a phenomenal underwriting department. Now, everybody out there, go to the videotape because Cramer interviewed this guy, and it was a great interview, December 16th. The company has over 40 million Americans are using it. They're going into the UK, baby. And I want to buy more here, Jim. Affirm.
Oh, you should buy more, Robert. I think that stock is going to par, which is genuine Wall Street gibberish, for $100. It's at 80 right now. Max Levchin, genius. He's a funny guy, too. Come on, man. Hoo-ha! All right, look, I think most of the gains have already been made in the oil complex. And at this point, I'd rather you focus on investing in terrific companies that are trading at a discount, because that's what 2026 will be all about. Oh, man, tonight, I'm kicking off the new year by reviewing the best and worst stocks in the S&P from 2025. From winners like Micron to losers like Trade Desk, I'll break down which names can keep their mojo, technical term, going into 2026, and which ones need to be avoided altogether. Then I'll take a look at the best and worst names of 2025 from the tech-heavy NASDAQ and share where I come down on many of these, which have a lot of AI in them. And Costco stock has hit a rough patch in recent months, but is now the time to start a position in the company? I'm going off the charts to find out. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.